What's up? What's up? I'll give everybody a second to get in here. I'll put my StreamYard on one side of the screen so I actually see the comments from both. What's up, Timothy? But from both Discord and YouTube. And also, for those of you that are in Discord, if you could put it in stream chat, like if you have any questions, just to keep it organized so I can kind of see it better, because crypto chat people will be talking and it's easy for me to lose questions or TA requests or anything like that. What's up, Ayn? I'll go ahead and get started a little bit. So one thing I wanted to review was this morning where we took those trades. I don't know if I deleted the positions to keep my, I think I kept, not that one. Something I'm gonna go in a little bit. This is how it should have been played. Oh, where was it? Been doing a lot of TA tonight. There we go. So we'll go over the first long position that resulted in a break even. So the initial logic behind this trade was whenever we're looking at the morning range or the daily range, from midnight on. For instance, if we come on and we're trading the New York session, you're trading anywhere starting from 7 up until 11 a.m., preferably 10 a.m. With crypto. There's two ways to look at it. The kill zone is really 7 to 9 a.m. Eastern time, but where where Bitcoin trades like the S&P and the Nasdaq, you can a lot of times see entries all the way up to 11 a.m. So for those of you who are just starting and can't really remember it, you can use indicators. There's some ICT kill zone indicators. You can also just put these vertical lines on your chart at different times, kind of like to let you know, like, when to trade or when not to trade, I guess I should say. So you could say, put one here and we'll do another one. It's really going to be redundant until we're going over, but whatever. We'll put one right there. Now, once we have this zone established, and this is where you're sitting down and at your desks, this or sometime after it. So, once we want to look for a level, if you're playing the liquidity raid setup, that happens a lot of times, either coming into New York stock market open, which is around 9:30, or also into London close, which is 10. So you can oftentimes see a stop raid scenario where we look for any recent internal structure. It doesn't have to be swing structure; it can be internal structure, but to be rated, and then we'll see a quick move to the opposite area of liquidity. So, we have to have more than just a stop raid to have this um, trade framework, if you will. You can get the framework from the low being rated. So, for instance, right here. So we came down, we had a low that was rated. So let's go back. I'm going to go to the replay. We'll go back here on like a 1 minute just to give you guys some insight on this. So, I mean, we saw displacement here. I mean, you saw gaps. They were filled pretty quickly. Um, not necessarily always the best for a long bias, but it's not something to, cancel a trade over. But here we came under this old low, and then we saw displacement in the move upside enough to where we did have a gap, right? We had a gap here, right there, the 1 minute. Get rid of this or edit mode, but we had a gap there on the 1 minute, and usually when you're playing these stop raids, you can just wait for price. There might be one fair value gap, there might be two, there might be multiple across the 1 to 5 minute frame. Usually you're going to find them on the 1 and 2 minute, but if you have one, you can wait till price comes into this area and then play the reversal, stops under the recent low. Depending on your risk tolerance, you could use the recent internal low, which would be just where the push to the upside genuinely started, which wasn't this low. That would have been this low right here. Right, that with Bitcoin doesn't work as well. I've noticed it works better with currency pairs like forex currency pairs, but it's two different ways you could have played it. We put stops here, and we're going to target these highs up here. Because when we look back on the 15-minute range at the daily high, the high of the day, or the high of the previous session, one of the previous sessions, we could have targeted. I think we had some other TP lines that I did delete. We were going to target the London highs or the highs of that morning in New York, which I think would have been right here, one of these highs right here, and then just the highs of the last session, which in this scenario we had these Tokyo highs, but a lot of liquidity in the form of equal highs. So if price were to continue on that path, that would have been the price targets. Now, in this trade, we saw price go 1-to-1, which means we had a quick little move to where we were in profits. I think it was actually more than 1-to-1, but in profits, the same amount we would be if we had had our stop loss hit. I see a lot of people asking me what's 1-to-1, and this is the best way to explain it. If you're like me, a visual learner, because I know it can get confusing, but just don't overthink it. It's literally just your reward was 1-to-1 to your risk. So if we're risking 1% of our portfolio on these trades and we go 1-to-1, that means your P&L was up 1% of your portfolio. Now, obviously we're not going to take full profits here. We don't take 1-to-1 trades. That'd be completely redundant. Because we're going to take losses. You want to make sure that you can control your downside overall by taking these high reward to risk trades. So we're not going to take all at that level, but a good strategy really is to take partials at 1-to-1. I don't always do it. I kind of just go by market structure more so, meaning like it can be internal, really weak highs on different time frames. But in this scenario, we didn't trim, but I always do recommend to put stops at break even no matter what. Now, if you become a little bit more advanced with TA, you can use your own gauge with this, because sometimes you may have an entry where uh, you kind of got in a little late. You were playing some multi-time frame analysis, and you just waited for like say a 1 minute choach, and you got in. I'm trying to think of an example. Okay, for instance, say if this TA would have been played out, if you would have gotten like up here, you're not going to set your stop loss to entry um, as soon, because your TA could play out and actually still stop you at an entry and still be a valid trade. If that makes sense. I don't want to confuse people too much and stray away from the main point. But here we saw the trade go 1-to-1 and quickly stopped at break even. Now, the reasons for this, looking back, um, when we look on the 4-hour chart, which you want to identify your swing structure in the 4-hour, right? We have our strong high right here, our strong low. This is our swing structure. and the way I drew it on the 4 hour. So when we draw a fib here, because there's a couple things you want to check off when you're trading, and none of them are necessarily make or break, in my opinion. You can use these with your own strategy and kind of determine a playbook where you combine different areas of confluences. But um, here we were in a premium, so longs are riskier, and they should be taken. The profits should be taken more aggressively. So when you do play longs in these zones, now look, if we see we have upward movement throughout, above this point 0.5 line, anything above the point 0.5 is in premium. So you could have caught long somewhere, maybe. I don't. Most of them probably were down here, but that was the first thing I looked back. I was like, oh, okay, that would have been a good thing to look at before taking them. I mean, you can get really picky with your confluences, and then you could also look at the 15-minute, because really the best time frames, in my opinion, for swing structure, aka finding premium or discount, are going to be your 4 hour and 15-minute. Daily is cool too, but 4 hour is going to be a little bit more responsive. Um, and yes, so if it's 3 to 1, my bad. If I just see these questions, 3 to 1 P&L. If you held all of your position all the way to the full target, you would make 3% of your port. Yes. So that's why it's a very good strategy if you are consistently winning. I mean, at least a 60% win rate. I mean, and that's not all that great or all that bad, but 3 to 1 is really the lowest I'd like to take, and really I'm getting more and more to the point where I prefer a 4 to 5 or 4 or 5 to 1. And really, the key to that is refining your stop loss and really understanding how internal market structure tends to be on whatever pair you're trading. And this is different for everything. That's why I think it's really important for you to focus on certain pairs. I went from here, if you see, here's my old watch list, has 110 coins on it. Now, I don't watch all these anymore. Why? Because for one, I don't need to. There's plenty of trades on the majors, and most of these shit coins, unless it has some fundamental catalyst, are going to move with the majors. And really, most of the majors are going to move with Bitcoin and Ethereum, and mainly we all know it's Bitcoin. So I think it's important to really get Bitcoin fine tuned, and it is one of the more difficult cryptos to do TA on because of all the amount of manipulation. Now, whenever we determine how we are going to refine these stop losses to where we can get those low risk rewards, that's maybe using internal market structure for a stop loss rather than the swing low, or this and that. And there's different strategies for that. We'll get to that another day, another video. But as for this trade on the 4 hour, we look back and we say, okay, well, we were in a premium. So longs are going to be, if you take them, you might find opportunities for longs. Like there was an opportunity here, because here's a great example, and this is why I want to go back over this in depth. So was there an opportunity, right? Well, we had the framework. So the framework's going to be a liquidity rate if we're playing this trade model. And there's a ton of different trade models. There's change of character and supply or demand. We have the AMD. I mean, there's tons of trade models, and you can even develop your own. That's what I'm trying to do with certain pairs, is develop your own trade model, or maybe your own variation of a few trade models you learn. One that's been and everything evolves too. Like everything's going to change. And one thing, if you notice what you're seeing on the high time frames, the trade models that are playing out, where the price action is going to oftentimes translate to those lower time frames. For instance, if you have a 4 hour supply zone that you see a 15-minute change of character in that plays out, well, in that 15-minute supply zone that you just made, or I'm sorry, 15-minute supply zone, then you can come back up to it on a 1 minute, and you might see the same exact change of character in that supply. And that's really just doing that multi-time frame analysis and understanding how price action is going right now. So looking back, when I had been, and this can change weekly. It can change, I wouldn't say it's going to change multiple times a day or anything, but you'll see it mainly on the 1 to 4 hour is how I've been trying to back test. Because before, these liquidity rates in the morning were playing out to a T. That was how we got quite a bit of those trades that we caught last week with that model. I will say they were more in a uh, optimal trade entry, right? Whether it be premium or discount, but um, some weren't. Some like for instance, remember we hit some crazy longs on like AVAX, and the Sologs didn't play out the way we wanted them to, but the TA played out. Our limits didn't get hit, and those both were in a premium of the current swing they were in. So you don't have to always play. Oh, we're not in premium. Oh, we're not in discount. I'm not going to trade it, but it will give you a higher success rate. Um, and while you can find longs within these, you should take profits. So looking back, the main takeaway I take from this are two things. Um, for one, I didn't really back test since I've got off vacation and see, oh, hey, is this trade model still working? And see what had been working. That was the one thing I look back, I'm like, okay, I could have done that. Um, and for two, I didn't take profits aggressively as like I should have. So even if I would have been here, I would have taken 30 or 50% here. I would have made 0.5% or 0.3%, and then when we took a loss later in the day, it would have dampened that blow. Or if we would have taken two break evens, I would have had at least some money. Now it's nothing to like write home about, but that would have been better than break even. So you could look at it both of those ways. Now, going back to like I said, looking back on what's been working. Okay, well, if I go back to the 4 hour, let's go to the 1 hour first. We hadn't tapped in any swing structure on the 4 hour. So in the 1 hour, we look, okay, well, there's supply right here. And the reason I use this wick is because I've refined it at the 15-minute. Oftentimes, you're going to be able to find that supply in a wick. Like if you see this kind of BFI candle where it's obvious bank and financial institutions are at play, that creating a wick like that, you can usually find the supply or demand in the wick. So we came into 1 hour point of interest. Let me change this template. It's a high time frame POI. Okay, price came into it. If we go down on the 1 hour, I usually like a 5-minute change of character, sometimes even a 1 minute. It really just depends. So if we look here, we look and price came into this. Let me get rid of this zone right here. You could look at this. The supply is this candle, this whole massive candle. This is a good example of somewhere I'd probably maybe look in for like a 1 minute and see how the 1 minute looks. Same thing here. We really didn't have a very clear area of supply, in my opinion, that I like. I've almost selected this candle if I had to, but really this is probably where you would look. And I know it's a down candle. This is just a weird way that I look at it. I just notice wicks, and I usually like using those levels. Back tested, it works a lot of the time. I don't know if it actually hit here or not. I don't think it did. It came close. So what the best thing to have done would have been just use the 5 minute. Like usual, if we're on a 1 minute point of interest, I like a 5 minute change of character. And then we're going to find the supply, or to attempt to find the supply like we just did, that sent us down on that change of character. So really, I guess if you look here, we had a change of character was really right here if you're using internal structure. So we could look back and say, what was the supply? You could maybe say somewhere in this candle. But in my opinion, the stop loss would have been the same. It would have been up here. Whether you use the bottom of this candle or this candle, it's really the same thing. You could have tried equilibrium of this, see if that worked. Doesn't look like it did. This is a finicky one. This is one where I probably would have just marked this whole candle up here and just waited for price to come into it. And once price comes into that, then you look, you go back. Okay, well, you just had an entry right here. You had an entry. You could have just set a limit. Yeah, you said there's a 1 minute imbalance. Let's see. Looks like there's quite a few. So there's this. could really just draw like this, in all honesty, and I guess you could move it up if you wanted to this. Yeah, good eye. That was where the entrance was. And that's why a lot of times you can use fair value gaps to fine tune your entries. So there's that 1 minute inefficiency right there. Um, at that point, you could just look for a 1 minute change of character. Really, your 1 minute change of character was right here. If you're using internal structure, because here's where you had your high, you came down, you started to make a pullback, the candles started making higher lows. Depending on, you could be greedy and use this inside bar, or you could use this right here. Regardless, price came back up, tapped into that supply. So you had a very quick entry. If you wanted to be sniper worthy, you got in right there. Stops above this recent high. Very good risk to reward. Or you could have waited until we came down and got this. I think this was on the 5 minute. We had another 5 minute change of character. And then you could refine that and find this 1 minute supply candle. And I'm really, these weird wick doji looking candles, that they're especially like call them a tombstone doji, whatever. They're really starting to grow on me. I like them a lot. I mean, they are snipes, and if you can use the bodies of them, I mean, look at that. I mean, that's there's a couple ape trades we had that were like using these. So there was the second entry. That was really the super fine tuned entry. I mean, your stop loss was let's see. Yeah, I mean, really, it was right above that candle. There's almost a, it's a full port. In other words, you could have traded that and gotten an insane entry. Now, and didn't take those. And the reason being was, like I said before, hadn't scaled back much and really looked at the kind of price action that we'd been seeing the past couple days, because it all is adaptive. Some days you're seeing the AMD price, or the trade model that's playing out all through the 1 hour to the 15 minute, or the 5 minute down to the 1 minute. And that's where you're using that multi-time frame analysis for added confluence to your change of character, or your liquidity raid, where we have displacement after. Those are really the two um, the waves right now that I'm seeing work a lot. And it's kind of, it seems like the market is kind of like cycling back between them, and you're able to find both entries, but using these fair value gaps. So we have liquidity, it's like a liquidity raid, break microstructure, leave an inefficiency, price comes in efficiency, target the weak highs. And there's another way, now looking back at this as well, because that's where we could have got the big move. But even looking back, because I was like, this, you can still catch these trade models, and this is why I don't recommend people necessarily trying to catch some of these moves unless they're really confident in um, I guess, the character of the pair they're trading. So when you look at this, if you really look at it, you could have just used an entry at the, we'll say the top of this inefficiency, and a stop loss below the recent um, low in microstructure. So really, where did price really begin to start making higher highs? Well, this was the last low before you saw that. Because here it was just, wick. We made a lower low, and here is where you saw an impulsive move where we went from here, higher high, higher high, higher high, and so forth until the pullback. So if you would have had, you could have put a stop here, maybe like a 5 pip grace period. If you're going to be that precise, you got to really get in tune with that. So you could have said like, 145, and the trade would have been there, and you could have targeted, because really here, and this is a good example of how we could have taken profit more aggressively, but you have to have a tighter stop loss, because a 4-to-1, this is just a fine trade. Now, in hindsight, this was easier to identify, and these trades that you are finding that are counter trend, and also you're at a premium longing, they're you have to really execute on them. And in this situation, you would have used your external to this range. If you're going to go by swing structure on the 5 minute, you broke down. So you're using external structure to kind of play the return to origin. So you would have just played up to the supply. And that's how you can look at price action in different ways. And maybe the idea or the framework was there, but the opportunity was executed incorrectly. So while this could have been just a whatever, sweep it under the rug, and this is what most people do whenever they hit a break even, because to me, I don't look at a break even like a loss, like it's not a loss, but at the same time I do, because there's something that could have been done differently where it didn't break even. And that's the way I look at this is, okay, well, if you're going to play these, you got to play them with a very aggressive stop, and you got to take profits very aggressively, and you have to adapt to the trading environment that you're in. So I wanted to go over that. I hope that helps some of you guys. It's really about, and the alternative to that is you could have just not taken it and taken the bigger moves. Really, that's the way I would have rather traded it. Would have been to go back and say, okay, well, what's price doing? Okay, it seems like the flavor right now is hitting these POIs or supply zones, getting a change of character, and shorting off of that. That seems like it's the better move. Obviously, you could have gotten a much bigger move. Now, you would have probably taken most of your profits here. I would have hoped so. You would have probably taken a lot right here if you're smart, and then the most here, and have a very small runner where you're at. Now going back, or well, not going back, I should say, but going to what I'm looking for now. After we see these, looks like we might get it here soon. You could take an entry off this, which this would be the more risky entry, but the better, or I guess more conservative entry, you could wait until we get this deviation down into this inefficiency. And I'll go down to the 5-minute, and I'll show you what I'm seeing here. I see that we have this range right here. We're getting really range locked. Liquidity is being engineered on both sides. Now, usually with this kind of situation, the first zone that the first side that breaks is going to be, the opposite of what actually happens, because it's a stop grade. So, you have your accumulation right here, right? Then we manipulate, and this is just the term for the trade model. Like ICT came up with a lot of it. There's a lot of different spins on it. Um, you could play this right here, right? You could play in this zone, or to get a better entry, you could wait until you get a confirmation. So how could we play this the more responsible way? Okay, well, instead of just entering here, you take this and you say, okay, once we make this zone up here, we don't have it yet, so this is all just speculatory, or speculative, but we have price coming. If we can get a break of structure, right, then we have some form of demand that sent us to break that structure, and then we play the return to origin of that, probably get a much tighter stop loss and a higher risk to reward. So that's one way, or two ways, I guess I should say, that you could attack that setup. What time is it? 9:30. Seems like right now a lot of the Tokyo session is, we're seeing these stop runs and more volatility during this session than usual. What'll happen is we'll kind of create a range from Tokyo, from here to the close, somewhere around here. I would have considered this your Tokyo low, and then during the London session, you're going to see stop raids, and same thing with New York. And oftentimes, you can pair this with the higher time frame bias, and then also other confluences to find your directional bias for the day. Interested to see how this goes, because I want to see, what I want is I want this second scenario, because I want to be a little more conservative with it. I don't want to just, while you might get the lower entry here, I mean, you can see this is a 14 to 1 if it were to hit full target. And then I think the other one we can probably get a better risk to reward. We don't know exactly what yet, because this hasn't played out, but that is kind of what I would have my eye on. I don't know how much I'm gonna be watching charts tomorrow, or it's Saturday. I have some stuff I got to do, but that's kind of what I would look at for Bitcoin. going into the weekend. Usually I would say we don't really have much volume on the weekends, but as you guys know, last weekend we fucking annihilated Saturday. That was like the best day we had trading the whole week. So don't always sleep on weekends. But so really with Bitcoin here, I look at this, and also another thing, if you look over here, go back to the 5 minute. I think it was on the 5 minute. If you go back over here, we had this very similar setup. So look at this. This was the range we had. Oh, look at that. Inefficiency. What did the price do? Came down, filled it, clear any microstructure, and then flew. Where did it fly? To the next 1 hour supply zone, or back up into premium. So look at this. What do you have over here? It's a very similar setup. Now we came back, came to this demand. We formed some 15-minute demand right here. Came down, tapped into it. Now what have we done? Change the character in the low time frames. Oh, look at that. Same thing. So that's kind of what I would be looking for here for Bitcoin. And from a 4-hour perspective, just so you guys know, I mean, in my opinion, we really haven't shifted at all. So, even if you play change of character on the high time frames off of internal market structure breaks, you could look at it two ways. So you could look at it like, okay, well, and this is the way that I prefer to look at it. We have our swing structure. This is your swing high. This is your swing low. Right? All this is just internal structure. You could look at it like in two ways. You could say this was your internal high, right? Because this is really where the move started to the downside. Or you could say this is where your internal high was. Now, if you're playing that, if you're playing the inside bar highs, which some people do, some people don't, that's where you could say, okay, well, we did have a bullish change of character. That's really up to you. I wouldn't look at it like that just yet. For the 4-hour, I'd rather have swing structure. But I will say that we don't really have the confirmation yet. But if we look at the daily chart, we're under, all old lows for the last 2 years. We've swept up a ton of liquidity. So I would be apt to try and look more for a bullish bias. I just really don't see it yet. I don't see it on the high time frames yet. I'm not saying I don't think it's going to happen. I'm not saying I think it's, we're just going to continue to drown. I don't know. As of right now, the high time frame structure is still bearish, in my opinion. So another thing, if you look, we're hanging out a lot in premium, and there's a lot of smart money entering the market at optimal trade entry, which I don't really like. Okay, what else? Where was that happening at? Let's take a look. So if we go back to the daily chart, and you can go back on a stream, we had said this pretty close to when we started shorting from like 40. Look back here, and your major swing structure. If you looked, I drew it this way. Hold on. What was Bitcoin doing? Hanging out at optimal trade entry, forming a lot of POIs in optimal trade entry. Smart money entering the market or exiting it at optimal trade entry. Prices hanging out a lot in discount. We're seeing a lot of these big important areas being built in discount. I'm sorry, in premium, not in discount, in premium. So that's one thing I don't like. But using liquidity principles, we should start to see a shift at some point. But the thing to keep in mind there is the macroeconomics just of the whole world. It's not like we've removed all of the sell side, liquidity ever from the market. If you look at this, we've still got a ton down here at 22K and at 18K, and of course, tons more. But I guess the really until we start to make higher lows on the 4-hour, I'm still bearish until the next liquidity target. So that's why when people ask me, oh, what's Bitcoin, what's it going to be at in a month, or is Bitcoin, is this the bottom? And the way that I look at it, I haven't seen a shift on the high time frame, so I have no way to answer that. But what I can do is I can play with this range, wait till we get good entries, try to wait until we're in premium for shorts because we're still bearish. Now you can play longs, but like I said before, price should be respected that we're in a bearish narrative, and you should take profits accordingly. Usually you're going to be in a buys to sells scenario, like that's what this would be. For instance, if this were to play out, we would see price come back up, most likely into this supply, trim aggressively, probably 50 to 75% here. I mean, you'd be up very much. You'd be, probably be 5 to 10% of your port in profits. And then at that point, you would wait till price comes up to your next POI. You'd be fully out of the trade, no runners, and then you're looking for shorts. So that's really the only longs that I see happening in this market. And that's another reason why I would rather be more conservative and wait for this to happen rather than just entering here. Because while we are beaten down and oversold, whatever you want to call it, we're under all these old lows, we've swept a lot of selling interest out of the marketplace, we still haven't seen a shift in the high time frame structure. So you have to keep that in mind. Overall, I guess just sentiment on Bitcoin, where we're at here, is I'm going to wait till price gets up to this 30,200, 250, somewhere around there, that level. That's where I really am going to revisit. Now if I start to see a change of character in the lower time frames, probably on the 5-minute. I mean, we have a 4-hour supply zone here, but in reality, I would probably look at the 1-hour zone somewhere in here, or on the 15-minute. And at that point, once price gets there, we revisit it, see if we have a change of character on the 5-minute. If we do, we can play, you can the initial change of character, or you can wait for a second break of structure, go into the 1-minute. I mean, that we just rinse and repeat that same ideology. But what's important is to remember what's going on in the high time frames. So that's really, I guess, my sentiment on Bitcoin at this moment. If you guys have any coins you want me to do TA on, let me know, and I can just hop on those. Really, all I've done is just Bitcoin a lot. I've just been doing Bitcoin. I did some on other coins this morning. I haven't even touched them since then. I haven't even moved the liquidity around, or where I think there's liquidity. Actually need to go ahead and do that on all these. Ape, I really like Ape price action. I know that sounds funny. I used to kind of like not want to trade it, but it's just, it moves so crazy. It's fun to trade, but it's weird. It kind of is in its own lane a lot of the time. Like I know that whenever everything else, like at first Ape went crazy and Sol was kind of lagging, and then Sol flew to full profit target, and Ape really just kind of, I think this was somewhere in this zone. It just died off and kind of went back to break even. I mean, after huge gains, but it's weird how it kind of is just in its own lane, which I like that because that gives me more comfort trading it than most alts, because if I'm not trading Bitcoin or Ethereum, I'm still using Bitcoin or Ethereum TA, macro TA with whatever I'm drawing on these charts for Solana, AVAX, BNB, you name it. And so I said optimal at 618. It's 618. Well, I use 62 all the way to 79. And then the 705 is equilibrium of OTE. So, I mean, I guess you'd say really a 705, but just this whole zone to me is OTE. So let me look at Ape. So we're just chilling in premium at this point. I'm going to look. There's probably some form of supply on the 15-minute in that 1-hour candle. Or not supply, forgive me, demand. Really here, I would say the demand was probably in this candle. I would have said you kind of made a little bit of a lower low than that candle. Although you didn't make a new micro low or a swing low here. I mean, you could look at either of these. It looks like you might be coming for it. right here would really be where the pullback started from this new swing low. So you didn't make a new low just yet. A lot of times price will do this. It'll come all the way down and not make that low, but that would be your aggressive stop loss, if you would have played somewhere in this zone. So it didn't hit that, so that the TA is still there. You could have said it was down here. Whatever, depends. Like I said, in trying to take longs in this market, I would be more aggressive. Maybe a little bit more liberal with your shorts because you're trading with the trend. So if we look on the 15-minute here, so let's go back over here. And if you wait, you came into a 15-minute zone. You could have waited till you had 1 minute change of character. Really, it was right here. Had that change of character there. Now, you could have said it was this candle if you'd like, whatever. It's the same. In the end, it's the same supply or same demand that sent it there. I would look at the demand on this wick. Like I said, I really like these kind of candles. We're on a 1 minute. You could go into this more on like a 30-second, 15-second. And I know some of you guys are probably like, oh, 15-second, it works. But that's really where the entry would have been. And you would be out of this trade for the most part by this point if you use the 1 minute. And this is the beauty of using the 1 minute. You can get these, because it's all about risk to reward. That's all that matters. Percent matters nothing. Everybody like I've went over a bunch in streams. People want the bigger percent moves and this and that, and it's just because they don't know what they're doing really. In all honesty, with percent or with position sizing, because you can make the same amount of money off of you know uh, much smaller move and in less time most of the time, which is more satisfying in my opinion. So for instance, we have a 2.7% move. I mean, this I would have been fully out of this strong high. I mean, you're really looking that's a really strong high relative to this time frame. Maybe left a runner after that, but off that trade, you could have made 11% of your, 10.6% of your portfolio. So it seems like right now, what everything is liking to do is really playing these supply and demand zones pretty heavily. So if we look and we're over here, we could also let's go back. Still didn't break that low somehow. I'd say it's going to get cleared though. Well, going like a 3 minute, when you look, similar setup that we had on Bitcoin. You have this inefficiency, and this is where shit can kind of get wicky with other coins. You have that inefficiency right there. So, if price can come down and deviate into this and we get a nice internal market structure break, I'd say right here, where I'd look, or this, you can be aggressive with it if you wanted. Could use this or this inside bar if you want to get really aggressive with it. And once that's the case, if we can get that break, then you can play a return to origin of the demand that sponsored said break. And that's how you would be, you would take this with a more conservative approach than rather just, getting in on the fair value gap fill, which is something I may have considered if we were more bullish overall. Because a lot of times, if you don't get in there, that's where you get left behind. And it's okay, but I would rather not that I would rather that not happen. Somebody said it's trends within trends. Macro. When I said that a minute ago, I was just talking about the macro economics. I don't know when I said only 4 minutes, but you could think of macro, I guess, swing trends, and then there's microstructure or internal structure. So your swing is going to be a little bit more of a clear move, and everybody defines this differently. But you're going to have your strong low and your strong high at one point. We cleared it over here. I get that. Really, the way I would look at swing structure, we didn't, because this looks like a liquidity grab. At this point, we didn't really get a closure, so I wouldn't consider that a break of structure. But you can say you pull back here. I mean, this is definitely one of these is your swing high, no matter how you play breaks of structure. And then in between all this, you had tons of internal highs and lows. And that's another video for another day. I'm not going to go into that because it gets really confusing, honestly. But for instance, like here, you could have said hide all these things. So here, you would have said, okay, here's a high, came down, because here was your low that made that high, right? Because low, high, right? We came down, and then when you look, this one's easy. They get more complicated. Here was your low, because after this candle, this was the last low you made before you started making new highs. But this could have been more let me see if I can find a more complicated one. Okay, for instance, right here you had a low, a high, and you would say this is your low. This is the lowest low that you made, and since you're trending to the upside, right? So you could look at it like that. That's how I would look at swing structure. But this isn't swing structure. This is internal structure. So I would look at the high where you really started, or where the pullback ended, I guess you would say. So for instance, it would be right here in the way I look at it, because this is where you really started to come up and clear out all of the old highs. Here came up, cleared 1, 2, another pullback. So what was the actual low? This was the low that made a new high. I know that probably was a little confusing, but I promise you that once you get it and once you see it, it's like riding a bike. You won't miss it. See, here with me, we reacted nicely, but I want a clear. We didn't even tap into the inefficiency, because you have a 5-minute, I think a 3-minute as well, probably 2-minute. Yeah, I would stick with probably that 5 and 3-minute. Sorry, syntax, I had to mute. Just background noise. But looking at this on the 1 minute, so it's like, okay, we're starting to make lower highs and lower lows. So I would really want the high, internal high, to be cleared before I would consider to change a character, or an internal market structure break to even look for supply, or I'm sorry, demand that caused that break. I usually don't even really look at charts this late. I'm about to be off of them for good after the stream. Oh, you're fine, bro. You're totally fine. It wasn't bad. I just did because I knew you didn't know. Definitely getting this displacement that I would want, though, from this area. At this point, you do have probably some supply within this wick, so you could see a rejection there. Really, within that wick, even. So that's why I think it's really important to understand, your parameters for taking a trade, and have a very, very mechanical set strategy that you have to stick with. For instance, like here, instead of just playing this, wait for that break of structure. This is just speculatory. It could be this high and then come at wherever you determine. I would say if I'm on probably use the 5-minute or the 3-minute. That's the lowest time frame the inefficiency's on. Let's say, well, I'd really say this high right here is where I'd be looking personally to break. So if we were to get a break of that high, you could then maybe find the supply, or I keep saying it fucking backwards. I'm just so used to shorting. All I know is supply anymore. But the demand, look at that. It might be this. Who knows? I mean, you can't really get too far into just guesstimating stuff before it's happened. But theoretically, if we broke this high right now, you could probably look for an entry there, stop loss below the most recent micro low, which would be right there. So And that's how some of you guys, I get DMs like, oh, well, why did you use the stop loss under the OB there and not the other OB? And it's just because you're using microstructure instead of swing structure. So if you want to use, and that's all personal preference. Like, it's totally up to you what you do there. You don't have to do it like that. You can do it a ton of different ways. You can use the swing. You can use just the recent, eyeball low. Oftentimes, the best way to put it, the swing loads are going to be what your naked eye sees pretty easily, and the microstructure is a little bit more difficult to interpret when you're starting out. But yeah, this is kind of what I'd be looking for in Bitcoin. Looks like this 1 minute supply had a nice reaction to it, like this one right here. But a lot of times when you have a very similar supply zone on a different time frame, you'll often see price run up to that area because there's probably still orders left within this wick the algorithm's placed. Not always, though. We'll see. Excuse me. Yeah, if any of you guys have questions, now's the time. I'm going to get off here in just a couple minutes. So ask them in stream chat. You can ask them in like if basically, I mean, really, I'm trying to get more and more in tune and just use microstructure, because then you get really tight stop losses. Yeah, you might get stopped out more often, but when they hit, you're going to be getting extremely high, um, reward to risk. But I would recommend using it over swing structure when you're playing counter trend. So, for instance, if I'm playing a reversal like this, like, we're down here, I'd rather use a very tight stop loss, because if price starts slipping, it might really start slipping because it's just continuing at that point. Because really, who knows? This could be just a new swing high. You know what I mean? And we're just getting, you might just get smacked because you're trading counter trend. You see what I mean? Because like here, it's like, oh, like low, high, or whichever swing or internal you want to use, and then you made a new low. But you have no reason to say in the 15-minute that we're in any form of bullish market yet. So you're going to try to use different trade models and confluences. Your change of character, your demand, this price model, the AMD, and you're going to try to use those to catch the reversal. So I like to have a much tighter stop when I'm trying to play reversals, because it will allow you to take losses. For instance, if you say if you took one loss, maybe you took one loss and then you still had the same bias and you took that second play, well, that loss means nothing because you recouped it very easily. So, and with reversals, it'll happen really often. Like, for instance, last week when we traded Ethereum, we traded it, got stopped out, traded it again, gained like, I don't even, it was like 5% of our port. And that was because we kept it. The reason we got stopped out the first time was because we had a super tight stop loss. But some people, you have to understand that strategy, because a lot of people get, shaken out, and they get mentally shaken up because, people have a problem with taking losses. And I'll just tell you, you shouldn't have a problem with taking losses if you're doing it right. And anybody who says, "Oh, I don't take losses, I have a 98% win rate," you're just fucking capping. You're just not, or you don't really trade much and you just get lucky. But taking a loss is totally fine as long as it's done the proper way, and you still, either your bias, if you're keeping these super um, tight stop losses, a lot of times your bias really didn't even shift. You just didn't get the sniper entry. Maybe whenever you're trading with the trend, oh well, my TA was broken, so now my bias is shifted, because then you were using swing structure. And it's like, oh well, now we've got a change in overall market structure. You know what I mean? So now it's like, okay, well now I'm just looking for the next supply or demand zone or next point of interest to then look for a pullback. So now your whole bias has changed up. But whenever you're trading reversals, a lot of times you can get stopped out on these little tiny stops more than once and even more than twice sometimes. But it's a slippery slope to teach people that, because then people just justify getting in positions and over again. It has to be done in a calculated manner for it to be done right. You can't just be like, you know, oh, I think we're gonna pump, so I'm gonna just keep longing when I get stopped out. It has to be, you have a very clear framework, and opportunities that present themselves. Bitcoin, it happens all the time. Like there'll be double liquidity sweeps on Bitcoin. It's just like Bitcoin is like max pain and like manipulation, and like you'll understand market manipulation and it'll still be, like the fuck's happening if you don't really understand microstructure. That's the key to and you and a lot of people, a ton of fucking people that I even see using smart money and all sorts of super complex strategies don't even understand market structure. I swear, it's crazy, and like I was one of them for a long time. Like I just understood swing structure. So that's something, I definitely want you guys to kind of think about that. And if you guys have questions, just drop some charts and at me in chat, and I'll do my best to, uh, try to assist with it and explain the best way I can. So he said QNT. I don't think it has a perp chart. So which chart is better, Coinbase or let's say Binance? So QNT, really here you got, this is your swing structure at this point. Ain't got to do TA, just PFE net. It went away. Oh, there it is. Yeah, I got you. PFE Nasdaq. I'm not really a stock boy. I mean, I don't know if that's. I just know YQ for futures and then NQ for like the actual, or N. I'm sorry, NQ or whatever it is, and then QQQ. QNT reminds me of Ape at this point. So really, so this is gonna be your swing low on the 15. These charts are pretty fucking illiquid, honestly. I mean, honestly, it could be pretty similar to the rest of the market. I mean, look, you've got a wrong tool. Got an inefficiency. Really, you had one all the way up to here in the beginning, but there was the one that wasn't touched at all. You came into it, didn't make a lower low. What is this? Why do I have a 0 on that? Oh, it's a fib. I'm stupid. I thought it was a harmonic for some reason. Where I've changed my charts white, I'll have harmonics that I didn't remember were there. I mean, really above this level on the 15-minute or the 5-minute, you're still bullish. I mean, I wouldn't be shorting this here. That's for sure. Odd out of that inside bar. It's exactly that fair value gap. But I mean, I would look for more of a long scenario. And this chart's just really fucking illiquid. There's a lot of gaps where price is rushing to fill orders, but it doesn't look bad. I mean, really, with a lot of these coins, nothing matters until you get a change in swing structure, really, in my opinion. And you've already got, it looks like really with this, you did get a change of character on the higher time frames. Because this is where you would say that you really made that new low. That was really your high. So you got to change a character there. So if we look at the 1 hour, okay, well, what was the demand that pushed us there? Well, right here. There you go. Okay, so now we can go and say, okay, on the 1 hour, well, we know we use a 5-minute change of character there. Okay, so where do we get that? I would say right here. Okay, well, where is your demand that sent you there? I would say within this whole zone right here, for me. Let's see where this lines up to where we hit over here. Didn't even really hit it. Maybe I drew it in a weird way, but that's how I would have drawn it. Let's check it on the 15-minute and see how it looks. Just guess you could draw it. I mean, you could try to draw this candle over here. It looks more like an institutional candle. I don't even think that still would have hit. Oh yeah, it did. There you go. Okay, 15-minute, you came into that. So now we could go 1 minute. And this chart sucks, but you really just need market structure anyways. This is still going to be kind of hard. Change of characters really right there. I don't know if that wicked it out or not, but we'll just say over here. Okay, well, what was the supply that did that? It's just, you see, it's the same thing over and over again. And it's got stop rated, but, say if you were trading this, you took profits already, you targeted these weak highs, you got a nice trade. I know some of you are looking at this like, how is he doing TA on this? But it's just the highs and lows. It's all that matter. That's it. It's that simple. And obviously, we're finding those supply and demand zones. But now you have this. It's choppy, but this could be an AMD setup. I don't really like it as much as others, but it's a good example of an alt just kind of mimicking the rest of the market. You also fully filled this inefficiency left back here that had already been really tapped into, but it's fully filled as of right there. You had that liquidity grab. Now you're seeming to want to make a higher low. So, say if maybe you got a change of character on the lower time frames, should be right here in this high. You got equal highs right there. You're probably going to get it. You could look for price to come up, sweep that internal liquidity, come back down wherever your demand was, and then boom. And then you target internal liquidity, preferably in premium of the current or the previous price leg. Where is that? Well, this is going to be a point of interest. Anything these huge wicks, and it's the last. Also, it's the last up candle before they move down. So somewhere probably in this area was, and it's not. I know it seems like fucking Chinese, but it's really not. And it is easier to look at in hindsight than it is to trade. I get that, but once you understand it, you start to see it more. So but again, none of this is really confirmed for me until I get what I need on Bitcoin or Ethereum, and really Bitcoin. But so for instance here, we could see this low get swept because it didn't even come down and fill the inefficiency like we said originally. So I'm not sure what you mean when you said PFE NASDAQ. Is that even a thing? I don't under. Is this it? Let me know, Wavy, what I'm looking at. Does anybody know? Because I don't think he's even in here. What's NFE? Somebody said PFE NASDAQ. Is that just this thing? Like this PFE SY? Yeah, that's what this guy said in stream chat. Oh, he said PFE NASDAQ. That's why I was confused. Because that's why I typed in and I saw that and I was like, I get, but he said PFE, yeah. So that's, but if you put, it comes up with something. Oh, that's definitely what it is. Is there any way for any, you know this, Haga, can I turn these fucking, this one? Oh, but there we go. Okay, so Pfizer, this is where I'd be really looking as your current, oops, fuck. You look at this is your current swing. This is really just an anticipation, because if you look here, I guess you did get your change of character even on the 4-hour, even if you're just using microstructure. Got that change of character. So you could have said this is probably most likely going to be your swing low, and we're anticipating this because we're playing a reversal. But you could. That's how I would look at it. So I mean, really here, I'd probably be looking for. I would say a return somewhere up there, and I would look for price to stay under 51, 53, 56. And that'd be aggressive. You could also use this high up here. It's really up to you. But I like using um, more aggressive. I'm all about taking trades, and then yeah, whatever, you get stopped out of something like that. But I promise you, it's when they hit, you can take that one trade and it makes up for 5 to 10 stops. So it's like fuck it. Exactly. And it's like exactly. And it's like that's the thing is like people want to just take wins, and like people would rather take this kind of win, like they would rather take like this. I swear to God, people would rather take that just because it's 23%. Like, yeah, it's like literally you need, yeah, especially with that shit with any of those, you need like it's like more like ticks even like fuck percents where you're getting fucking either rich or liquidated. But really with like these trade setups, it's all about just getting that good risk to reward. And a lot of times, if you're patient and you use the 1 minute, you can get that same risk to reward in a very short amount of time. But you just have to know when to take your profits. Um, oh, the other one's Nas. Um, oh, it's actually in a POI that I'd drawn at some point. What is this from? It reacted to it pretty nicely. It's old, or maybe this is something that we drew on. I think Alga, you were actually going over this too. Yeah, there's an inefficiency right there. It tapped it, didn't go into it. I would probably look for wait till the morning, and I would look for a stop run. And this would be a good example of a stop run scenario I'd look for. So if you wait till the morning, um, you're gonna have pretty obvious structure. You have a swing structure here. I would preferably look for this to get rated, like something like this. Oh, we come down, sweep that low, go into the inefficiency, maybe make another liquidity grab because everything loves to do that. And that first low is usually not the last. Then you come up, microstructure break, turn to demand the sponsored said break, target the highs. Ideally, weak highs, whatever. Really, you'd be targeting this heavily because if you did it right with a very tight stop loss. Now you could hold and swing some of it, speculating that we're going to move more to the upside. But at the 4-hour, you're really just kind of pushing that because um, you haven't really made a high or low any kind of swing structure. Yes, you did clear some old lows for sure. So you could look for that. I guess once you cleared your, what would be probably most of your profit target if you took this from a very tight stop perspective. But at that point, that would really be, you'd have to retrace and then make another higher high, and there'd be another trade entry. But it doesn't look terrible here. I mean, it's just like that's what we've been saying. That's why you can't just use every supply and demand zone because you'll get wrecked. So you have to wait for the high time frame bias shift because, yes, we're under old lows. Yes, we've removed a shitload of sell side, but that doesn't matter if a PFE. That doesn't matter if we don't have bullish market structure. That's like literally the first thing. If you don't have good structure, you don't have bullish structure, then you don't have a bullish bias, in my opinion. Now, you could look at other ways. You could say like, oh, we're in demand, and you could back test and show me like, oh, dude, well here we tapped demand and it flew and this and that. And I maybe sometimes it was the reversal point, the absolute bottom. But the way I look at things, I'm not trying to necessarily catch the absolute bottom. Now, on it, when I used to just play set and forget limits during trending markets or even not trending markets, I've had some fucking insane plays. Like I remember Dot last year. This was off some simple, just basic SMC, like stupid. Like okay, well here we go. There's this. Oh, or actually, I think it was this. I drew this zone. I was like, yeah, look at this. Oh, we got this demand zone. There's an order box sitting at um, equilibrium. It's like, holy shit. You could look back and tell me, like, oh, dude, it does work the best. Look at this. This is like, look at this play I caught. And while that did play out crazy, really the better entries weren't, I mean, the more rational entries, in my opinion, weren't right there. That was kind of just like, they worked. It obviously worked. But if you look back to like maybe, um, I don't know, the next range where you saw it, it didn't work. You know what I mean? So I think it's all about finding a consistent um, strategy. It's like, oh, if you look here, oh, like we have this order book here, you can see you just got completely annihilated if you played that. So that's why it's better to not try to just catch the absolute bottom and wait for that confirmation because, yeah, it may work sometimes, but, as a trader, you should be really trying to fine tune your strategy as much as humanly possible to the point where it's like, people are like, wow, this guy's in the 1 minute, but yeah, that's how you're getting the good entries. Yeah, because it shows your entries and shit on there, right? Right. Literally. Exactly. And it's really the internal structure that people fuck up on. The swing structure is kind of easy, but people fuck up with the internal structure. And I've even back tested on a lot of crypto. I swear, trying to play internal like changes of character on certain time frames, you get just stopped out and stopped out again. And I'm like, dude, I'm sure people get fucking literally discouraged trying to play this shit sometimes. But well, on that note, I'm gonna hop off here. I can smell that my dinner's made me, or my fuck, my girlfriend's made me an amazing dinner, and I'm hungry as fuck, and I don't want her to kill me for not eating it while it's hot. So I appreciate you guys as always. We'll hop back on here on Monday. I'm probably gonna start doing some streams through the day as well, so that way we can kind of catch some of these moves real time, and you guys can see how we're finding these setups um, as they happen. I'm probably gonna have to use like another computer to trade. I can't trade on mobile. I have to have a PC. I don't know. I'm like weird. Everybody likes mobile, but I just want to be able to type really fast. But we'll figure out a way. You feel me? I'm like, dude, people love mobile for trading. Like, fuck that shit. I'm like, this stresses me out. But I appreciate you guys as always. And until the next time, I'll holler at you later. Peace.